My portfolio is up roughly 85% this year. I have taken profits on most of my options positions and have raised around 50k in cash. I also collected nearly 15,000 by selling covered calls against my Palantir shares. All of this without selling my core positions, which are mostly shares. I am not calling a crash, but there are a few things that do concern me, which I will talk about in this video. The largest move was Palantir. I sold 3 calls for December 2028 at a 104th strike for around 25,000 and realized 13k in profits, and that's about a 100% gain. I also closed 5 Palantir cash secured puts for a combined profit of 2.3k. On Meta, I sold 2 long-dated call options for a combined profit of 3.3k. The catalyst for taking profits on Meta was the allegations and trial over Meta's platform and how it harms children. On ServiceNow, I sold 5 long-dated call options for a combined profit of 5.4k, which is around a 35% return. I also closed a few Nebius cash secured puts for a combined profit of around 1.5k and several other various trades with similar small profits. I do have to note that I am very much so a bull for these companies, but not so much that I remain exposed via leverage on them. I don't want to become the next Leopold. I generally prefer to have leveraged positions for 1 or 2 months maximum. What I did for Palantir is more interesting though. I decided to sell 6 covered calls with a 390 strike in December 2028, and I collected around 15k of premium against my 600 shares. The first reason is the bond market. The 30-year US Treasury yield is almost 5.4%, so it is the highest level since 2007. When government bonds offer more than 5% return, then expensive technology stocks face stronger competition and greater valuation pressure. The second reason is geopolitics. The major conflicts do not appear anywhere close to a resolution. Another energy shock could revive inflation and fears of rate hikes. Furthermore, the November 3rd midterms add policy uncertainty around spending, taxes, regulation and trade. They don't guarantee a correction obviously, but uncertainty matters when valuations are already high. I am also watching employment though. A weaker labor market could hurt demand, while persistent inflation could limit the Federal Reserve's response. Not to mention the reduction in the employment participation rate. I am not betting that we will have a crash. I still own my core shares, and I do participate if the market continues rallying. But if we get any sort of unjustified post-earnings sell-off, or pullback for no reason, or a reason even, then I will have cash available. And that is the whole point of raising cash. Making the next red day or days useful. My August strategy was simple. Take profits on leveraged positions, keep my core shares, collect premium, and hold cash for better opportunities. I am still bullish overall, but I just cannot be positioned as though nothing can go wrong. Are you taking profits or are you remaining fully invested?